What comes to mind when you hear debt collection?
Scary.
What did you say?
Scary.
Scary.
People hounding you.
People hounding you.
Very unpleasant.
Unpleasant. What else?
Bad tactics.
Predatory.
Do not answer the phone.
So I am Laura Marino. I'm the Chief Product Officer at TrueML. TrueML is the parent company of TrueAccord. And our mission is to make sure that nobody is left behind the financial system. And our first step towards that mission is to reinvent debt collection. So I frequently tell people that I work in the least sexy area of fintech because, as you just mentioned, there's so many negative associations with debt collection. So we're going to talk a lot about debt collection today and what it is and how people who are going through that very difficult period are feeling. But let me tell you a little bit more about me. I have been leading product teams in tech companies for over 20 years. I have been in small and large organizations across a whole range of industries. I spent 10 years in speech recognition. I have been in HR technology, and now I'm in fintech. So compared to many of you, I probably am a fintech newbie, and I'm absolutely thrilled to be in this conference because I'm learning with every conversation that I have. I'm also a guest lecturer at Stanford University. I teach product management. I also teach product management at my alma mater in Bogota, Colombia. And I'm a big, big advocate for women and diversity. I'm a board member of Leading Women in Technology, which is a nonprofit dedicated to promoting women in leadership. So let's get started with another question. What is the first thing that you think you need to do when you are building a new product or service? And I know we have engineers here, hopefully also product people, but everybody who's involved in delivering a new product or a new service has to be thinking about it. So what do you think is the first thing that you need to do? Talk to customers. Customer discovery. Understand what is the problem that those customers that you're trying to serve have. So yes, you are all right. You need to understand those target customers. You need to understand the needs they have. You need to understand the problem that they have. You need to understand the circumstances that they have so that you can better tailor that. You also need to understand their attitudes and their motivations. Fintechs have been very, very good at this. In many ways, some of the success of some of the challenger banks and so on is based on the fact that fintechs went back to focus on those customers, on those consumers, and started providing a service that was better than many of the traditional banks or traditional financial services organizations were delivering. So let's meet Tanya. Tanya is a 39-year-old woman. She lives in Denver with her husband and her 2 kids. She's primarily a stay-at-home mom, but she has a side business with Etsy where she sells her jewelry. And that business has been growing and has been bringing additional income to her family. So she wants to grow her business by getting a loan. And let's say that you have a fintech company that's providing lending. And Tanya is the perfect target customer for you. She is financially stable. She meets all of your criteria, and so you give her a loan. And what you're trying to do is to continue to grow your business by attracting more people like Tanya. You want more of those consumers, and you probably want to also start offering additional services, additional products for those consumers to make them real loyal consumers. But in financial services, there is a reality. Life happens, delinquencies happen. Some of your customers, some of those consumers that you have, will go through a difficult time at some point, and they may stop paying back that loan. They may stop paying for that credit card that you had given to them. And so my next question to any of you who are in any way involved with lending or providing credit is, how do you think about those consumers, that subset of your consumers, who falls in default? Any? Do you even think about them? I actually had a very interesting conversation a couple of months ago with the product manager for Cash App, and he was responsible actually for the lending side of Cash App. And I was saying, well, how do you think of those consumers of yours that fall into this situation and cannot continue to pay? And he was like, oh, we take the data and we add it to our underwriting models. And like, okay, great, you're gonna get better models, but what about those consumers? What happened to them? And he didn't really have a good answer for that. So let's take a look at Tanya. After 6 months of paying her monthly installments on time, she misses a payment. And so maybe she forgot about it. But then she misses the next payment. So what happens? Well, what you may not know is that her husband lost his job, and now with the part-time job that he has, he's not able, the family is not able to cover their basic needs, their mortgage, their kids' school. So now Tanya is in a completely different situation. She may be maxing out her credit cards. She may be relying on things like buy now, pay later to have a better sort of cash flow. But definitely, her relationship with money has changed dramatically from when she first took that loan. And there is a reality about the relationship that people have with money. Financials are always a sensitive topic, but the type of relationship that people have with money sometimes is something that starts from a very young age. But it becomes especially obvious when people are in financial distress. So at TrueML, we did a very detailed study of a lot of our consumers. We engaged a large marketing firm, and we looked at a lot of our consumers in debt. We had surveys, and we also did some in-person interviews. And I'm going to share with you some of the answers we got when people were asked a little bit about their relationship with money.
My dad was really into money whenever I was growing up, and you know, he was always working and always trying to make ends meet financially, and he really pushed hard whenever it comes to that. Whenever I was a kid,
whatever I did, it was like, so if if I had chores, I got an allowance. If it was my birthday, I got money, so it seemed like it tied to good things. Money was tied to good things.
I had no comprehension. And I think that happens with most people. I'm going back to kids, right?
Yeah.
And, you don't know if you're rich or you're poor or whatever. You just, you want a bike, and if you got it, then you're rich. And if you don't, then you're poor.
How will I say this? It touched all facets of my life. Like everything involved money. You want to go out, money. I want this. It costs money. So money was everything.
We have a love-hate relationship. Some people say, money doesn't make you happy. No, it don't. But it damn sure helps. You need money for everything. If you need new clothes, you need, medical treatment, you need gas or a ride or whatever. You need money.
So there was a pretty in-depth study that Capital One did. And what they came back with was that 78% of Americans say that finances are their biggest source of stress. And this is across the population. And that it's a bigger stress than even politics, work, or family. Now, that stress gets even worse when people actually fall into debt. And to understand why debt is such a difficult period, let's do what I would say, that I would call it debt 101. And this may be a little repetitious for people who are very familiar, but there is good debt and bad debt. Good debt is the type of debt that helps you build a credit history. It's the type of debt that you're paying back according to the terms, and that actually is showing that you're creditworthy. And by building that credit history, you actually start being able to access more credit and with better terms. And some people have a tough time starting to build that credit history, and this is why some of fintechs are focusing on how to start providing some level of credit or lending to young people who don't have a prior credit history, or even to immigrants who come new to the country and don't really have a history. So they are trying to help those people start building this credit history that will allow them to access more credit. That's the good debt. Bad debt is delinquent debt. Is debt that you were not able to pay back according to the original terms. That debt probably will cause even higher costs because you may start having to pay interest or having to owe interest. But it also not only doesn't help you build your credit history, it damages your credit rating. And so people who are in debt start getting even worse and worse consequences because that debt continues to increase if there's interest to be paid, and their credit scores start going down if the creditors are reporting to the credit bureaus. So the opportunity to access new credit gets harder and harder. And for those of you who may not be as familiar with how debt works, is typically when somebody starts falling behind with their payments. Like, let's say somebody has a credit card or a loan. If they start falling behind with their payments, initially, typically that creditor, that service provider, will start reaching out to them directly. If it's a bank, the bank may send a couple of messages. They may have their internal customer success team, who typically is just helping consumers with their questions. They may have some of those agents start making outbound calls to remind those consumers that are falling behind that they owe a payment. But typically after 60 or 90 days, those creditors decide that it's better to write off that debt as a loss. So what was that early stage collections that they were doing, they stop doing that, they write off the debt as a loss, and what they will typically do is then partner with a third-party debt collection agency that will try to recover that debt. In some cases, they may choose to sell the debt to debt buyers. There are companies that are debt buyers, and what they do is they buy debt for cents on the dollar, and then those companies themselves try to collect or engage with third-party debt collection agencies to start collecting on that debt. And traditionally, the way that those debt collection agencies operated was they would have a large call center. And those agents were not paid a lot, and they would be paid on commission. So comes the end of the month, and those agents are expected to have recovered a given amount of debt. So what do? They increase this intensity of calling and potentially even threatening those consumers who are in debt. And this is why there was so much abuse traditionally in this industry. And this is why some of you were talking about the concept that people have about debt collection, of it being abusive, comes from that situation in which you have those call center agents that are in a tough situation themselves, being forced to really hound people to try and convince them to pay. And as a consequence of that, is that there's so much regulation around debt collection. And if you're in fintech and you think that you're dealing with a lot of regulation, just try to do third-party debt collection. There is a lot of regulation, but again, it was because there was a lot of abuse in that. So according to a recent report from Urban Report, 64 million people, or about 28% of Americans, have debt in collections on their credit report. What that means actually is that it's even a higher number because not every creditor reports to the credit bureaus. So this is a massive, massive problem that we have in this country. And I want to go back to now look at what does it really feel to be in debt if you are one of those 64 million people. So I'm going to play some other videos from the interviews that we did, and this time more asking how what is their situation, how do they feel? And I want you to listen to the feelings and sentiments that they express, and also a little bit their sort of motivations to pay.
It was new to me to be in a difficult financial situation. You know, in years past, I had a successful career and all these things, and it slowly started to unravel, I think, and I was in denial for a long time, which seems to be a common occurrence for people that go through different financial struggles. Like they tend to deny it at first or something, or pretend it's not as bad as it is.
I think maybe for most people it's scary to take that initial step, or stressful. Like, I don't know, it's like an adult slap on the wrist kind of thing. You know, it's like I don't know, big kid timeout, it feels like. To have to make that call, and I don't know, it just makes you feel dumb.
The hardest part sometimes is asking for the help. Part of it's like embarrassment and pride. You know, like you don't really want people to know that you need help. And it sounds crazy, but it's like you just always feel judged. So when I go and ask for help, I'm like, oh great, they're gonna judge me again. And it's just trying not to feel so defeated.
I don't really talk to any of my friends or, my husband, or not even like a financial advisor. Maybe like a little bit of guilt or shame, because you're in debt, and it's like, but then people see you with the Tiffany bracelet on, and it's like, how is she in debt and she's got like a $400 bracelet on? So it's like iffy to me to talk to somebody about it.
My goal this year is to buy a house. They just raised my rent. I'm $150. I just tired of struggling, What's most important? A house, or, the bills being paid on time. I have to fix my credit. I have to maintain, what I need in life.
Yeah. And, I hope that I will maybe have something to retire with. It's nerve-wracking to even try to think about the future. So once again, I'm still just trying to get by and, pay rent and, utility.
So what were the themes that you heard in those conversations? Judgment, worrying about the future. You also heard a lot about shame. And there is a lot of stigma still associated with debt in our society. And in fact, the broader survey showed that 85% of people that we interviewed said that they were uncomfortable talking about their credit card debt, even with their family. More uncomfortable than talking about their health or their political views. And 59% said that they felt negative stigma attached to asking for help. And because people feel stigma about asking for help, it becomes a cycle where they are stuck. Part of the reason they felt stigma attached to asking for help was because of their own guilt, part because of the stereotypes that it means in society. And you heard one of the women say, like, people are going to say, how can she be in debt? And she has been spending money on things. And part is because of the way that their service provider treat them when they are in debt. So this is going back to how those collection agencies or even the banks, when they first reach out to people who are failing to pay their debt, treat them. So all of this becomes a really difficult situation because people who need help are not feeling like they can even ask for help. And I would say that one of the quotes that we got during these interviews that for me was particularly telling because it really summarizes the situation is this quote that I copied here. Carrying around a large debt is like wearing a scarlet letter only you can see. Its dominance over your life becomes overwhelming. You become your debt and it seeps into every aspect of your life. So going back to what I was saying at the beginning is those consumers that had started with their credit card, with getting a loan, have become a very, very different person the moment they have to deal with this very stressful situation of being in debt. So of course the question is, how do you engage with those new consumers? How do you engage given that they are different than the consumers you had when you were first servicing them? So first is, of course, you want to engage them using digital channels. We know people don't want to answer their phones. We know that phones put people on the spot right there. But digital channels allow people to really choose when to respond, when to look at things. So we'll talk more about what it means to engage with digital channels. And it's not just saying we'll do an email campaign. It's a lot more complex than that. But you also need to deliver a personalized experience. When you listen to some of those interviews, you can see that each person, while they are going through the same type of experience, each person is different. And they will respond to different things. So you need to personalize that experience. And all the time you need to keep in mind the mindset that they are in. And finally, you need to maintain compliance every step of the way. So let's look at a little bit more in detail each of those. First one is consumers prefer digital channels. I don't know how many of you are fans of John Oliver. I'm a big fan of John Oliver, and this was a quote in one of his sessions. And he says, the best phone call is a text, the second best is an email, the third best call is 2 traded voicemails. Everything else is a complete nightmare. And that is for somebody who is not being hounded by calls. But what we know, and there was a recent study lately showing that 90% of people, or 90% of unidentified calls go unanswered. And I'm a good example. I get calls on my cell phone from numbers that I don't recognize. I will not answer the calls. So not only is calling bad for the consumers who are in debt, it's also very ineffective for the creditors who are trying to reach them. But starting a digital-first approach is not easy. Because if you are trying to communicate at scale, there are a lot of complex things that I didn't know until I started working with TrueAccord. We actually have an entire team dedicated to channel operations because it's not as simple as to say, I'm just going to start sending emails or SMSs to my consumers. When you send large volumes of emails, the first thing that you need to make sure is that those emails get delivered to your intended consumers. And there's 2 things that are different, delivery and deliverability. Delivery is, did that email that you sent actually get received, or was it blocked? And it may be blocked by the ISPs, it may be blocked because you didn't have the right email. But the second deliverability is, where does it get delivered? Does it go straight to the spam folder? And that depends on many factors, starting with the domain reputation and the IP reputation. So what happened is ISPs, Google, Yahoo's, Apple, they are trying to protect their clients from spam, from bad actors. And so they are watching for a certain things, and that's where this reputation of the domain comes in. We had a very interesting case because one of our products is for reaching out digitally for first-party collections. So this is white labeled. So we send that communication on behalf of the actual owner of the deed. And we do it using one of their subdomains so that the email comes from them. But we were watching this and we saw that another one of their subdomains was having terrible deliverability, and our operational team could see it. So we gave them a warning. Well, it seems that they had another vendor trying to do some testing on also recovery, and that vendor did not understand what it meant. And what was happening was the ISPs were blocking a lot of the emails that were coming out of that other subdomain because they were not getting the right quality. So there's a lot of understanding to just get your messages delivered. And as I had mentioned, it's not just about delivering a message. It has to be personalized. So having a campaign to send an email to all of your consumers every week or every other week with a generic message is not going to do the trick. So how do you personalize? What we have learned is that you really need to leverage this understanding of the consumers. And we do that through a lot of experimentation and A/B testing. But what is most helpful is then you start relying on machine learning. Because again, what you need is to be able to personalize at scale. And we rely on a lot of machine learning and models that we continue to improve. And really a lot of what feeds those models is actually the behavior of the consumers themselves. We start seeing what they respond to, and we start iterating from there to see for each of the consumers what's going to work best. So, and again, compliance has to be there all the way because it's very highly regulated. So let me tell you a little bit more how it works. And again, the way that it works is that we both in our first party or third party collection, the creditors, the owners of the deed, will place those debts with us. And what we need to start doing is reaching out to those consumers, engaging with them, making sure that first of all, they are aware that they have this debt. And then ideally what we want to do is guide them to a payment portal where they actually can feel in control of setting up a payment plan that works for them, where they have some control as to how much they can pay, how frequently they can pay. And then what we try to do is keep them on this payment plan until they actually are able to close that debt. In the case of the first party collection, the early stage, sometimes what we do is to just guide them to the payment portal of the fintech or the original creditor. And so what we're doing is primarily this outreach and just getting them to that. But in the third party collection, we have the whole process. And so when we say that we want to tailor every step in that life cycle, we start with what communication channel to use. So we may do email, we may do SMS. We typically will do a combination of both. So we're deciding in every step what is the best channel to use for this consumer at this point in time. We also have to decide about the communication cadence and the timing. How frequently do we send them messages, and what time of the day? There's actually something very interesting about trying to make sure that they receive the message top of their inbox during the times that they are most likely to look at that inbox. And it will be vary by person. Some people are able to take a look during lunchtime in the break that they may have from work. Others prefer to look at their mail later in the day. So our AI starts figuring out what is the right time to send the message. And then, and this is very important, is content and tone. Different people respond to different tone and to different type of content. And I'll give you an example of what those differences may look like. Again, we start learning from the interactions that we have. If the person opened the email, if they got engaged, what is the tone that works best for them in their current situation? Then we also look, what's the best next response? What did the consumer do? They opened the email but didn't do anything, or did they go to the web page but just didn't do anything with setting up a payment plan? So we can reactively respond and say, hey, was there something you were looking for that you didn't find? Were you looking for some other options, for example? And then we also decide what is the best payment option. Now, we provide a lot of flexibility, but we also know that showing them upfront something that will be engaging is going to eliminate one more step for them deciding. So for example, depending on the size of the debt, the age of the debt, we may offer a couple of payment plans that we believe will be the most applicable to that person. They can always go and build their own payment plan, but we want to just upfront present to them what we think will be most compelling. And then once somebody sets up a payment plan, and yes, some people actually will go and pay the full amount, but most people, especially because they're going through a difficult situation and they may have multiple debts, it's easier for them to start paying slowly. So once they sign up for a payment plan, we want to send them reminders. We want to let them know that if the next payment is coming up and they are not going to be able to make it, that they have the option to push it out. And we actually have models that help us predict if somebody is likely to break their payment plan, if somebody is likely to not make their next payment. So we proactively reach out to them and remind them, you can go into the website and change the date, or you can call our call center, inbound call center, and they can help you do that. And so I was mentioning about tailoring the content, and I'm sorry that you probably can't read it from the distance, but what we have is a big library of content for the message that has to go at any point in time, but we have it with a whole range of tones, and our decisioning engine is deciding which one to use. So for example, there's one email that is very much to the point. It's like, Tanya, it's time to make a plan. And it's very short, and it's like, make a plan for your outstanding balance with this creditor, and go to begin. And then the other version of that same message is completely different. It's much more communicating that we understand how they are feeling. So it starts just at the subject with, we would like to help you address this debt you have. And then we have a whole piece starting saying, we are sorry that you're having to go through this period. We want to help. So it's much longer, but it's much more reassuring and helpful. And I tell you, I mean, if my husband were to look at those, he would be totally like, just get to the point. I just want to take care of this. I probably would react a lot more to the more empathetic one. And so that's what we do. We start learning what works best for each of the consumers. We, as I mentioned, we try to offer the right options in terms of the payment plans. So when the person engages with the email, they have a link and they land in a page that will have offers for specifically for their debt. And we will offer typically like 3 payment plans, and they can just pick one of those, or they can go and build their own plan. But it is our decisioning engine that is saying, okay, for this debt, for this person, for where they are, we believe that this would be the most likely payment plans that they could sign up for. And we do something that I actually like very much, and it's people who are trying to pay back their debt. They are making an effort. There's not a lot of immediate reward when you're just trying to pay back a debt. And we want to celebrate their progress. We want to let them know that we appreciate that they are making an effort, and that, by the way, they are making progress. So we send them not just a confirmation of their payment, but we send them an email reminding them, hey, you are making progress. You are 23% paid, or you are 50% paid, so that it's a little bit of that positive reinforcement that is not something that people typically get when they are just trying to pay back a debt. So one thing, though, is data matters. A lot of those decisions, this ability to be deciding every step of the way what to do, comes from using the data and learning from the data. We've handled over 20 million consumers, and we send 1 million communications per day. This is what I was saying, that understanding what it takes to send communications at high volumes and not get blocked by the ISPs is pretty important. And for each one of those communications that we send, we are making multiple decisions: what message to send, at what time, when is the next message to be sent. And so we're doing this continuous learning and optimization. So kind of wrapping up a little bit is, if you're building for the downtimes, and again, our consumers were quite different than the consumers you had when they were first accessing your credit or your loans. The first thing that I would say is we all need to realize that debt collection is part of a consumer financial service. That's the main change. It is, our creditors are our clients, but if we do what's right for the consumer is much more likely to pay back to those creditors. And it should be a modern, consumer-centric financial service. And we also know that that original customer profile of that person that you had first engaged with is very different than the profile of the person once they become delinquent. So you need a different and a new engagement strategy, and you need a way to keep thinking about what is the mindset of people that are going through this period. Machine learning, and this is kind of one of the really great uses for machine learning, because it allows you to do this personalization at scale, as long as you have good data. And again, what we have seen, and we've proven that, is that better consumer experience leads to better outcomes for the creditors. One thing to keep in mind is when somebody has something bad happen, they lose a job, they get sick, they typically will have multiple debts because all of a sudden they cannot pay their credit card, they cannot pay their loan. And so they have many debts, and they may be being reached out to pay many of those debts. The consumer will pick the debt to pay when they feel that they have more control, that they are feeling that they are being respected. So in many ways, the consumer is choosing which debts to pay first. And if they are being treated right by somebody reaching out to them, they will favor paying that debt before they pay another one that people are calling them about. So just to finish, like, does it help? Does it work? And yes, it does. I think I can tell you that for me, one of the most rewarding parts about working for TrueML is to see what we get, the comments that we get from the consumers that we have helped. TrueAccord, that's our subsidiary, is a licensed third-party debt collection agency. We have 4.8 stars in Google. Like, when would you think that a debt collection agency would have 4.8 stars in Google? But it's because the people who are going through this process really, really appreciate the fact that they are being treated with respect. You can see some of the things that I highlighted here. The encouraging tone to the language was a great method. It really engaged them. Somebody said, I love the follow-up emails instead of calls. I appreciate being treated like a person. And I couldn't make a payment on my payment date. I could easily change it to the next date. So that flexibility, that empowering people who are going through this really helps. And it also works for our clients. I was at a call with somebody from the CFPB. You all probably know CFPB. And they were asking me, like, why is it that you are able to collect more than even those fintechs that are very good? And I said, it's because we've focused on really understanding those consumers at that point in time. And that's why we can engage with them better than any of the other companies. So I think that's what I had, but I wanted to open this up to questions. Anything else that you want to know about that? Yes?
I guess when you look at a lot of machine learning models, they have so many different data points that they can kind of look at. But I would, I guess, assume that like when you get a debt, you only have a certain number of kind of data points. Maybe the person's name, possibly their gender. But do you enrich that customer information so you can, provide much greater personalization of these data points?
Great question. And I'm going to repeat it a little bit. So essentially what you're asking is, what data are we using for the data models? Are we enriching any of the data that we get from our creditors? Actually, we are not. And most of our data models are very reliant on what we see from the behavior of the consumers themselves. On purpose, we don't use demographic data because we need to be very, very careful that there's no perception in any way that this is biased. So we do use things like the amount of the debt, the age of the debt. It is very different when you have somebody who has a debt that kind of they started being in default recently versus somebody who has a debt that has been around for a long time. Those are some of the pieces of information that we use. And then we rely a lot on seeing what the person is doing when we start engaging with them. With third-party collection, the very first message has to have a lot of information about the debt. And then we start trying to engage them with messages. And we see how are they responding and start tailoring to that. We are probably going to start looking at what additional data we might be able to leverage. But right now, it's really primarily data related to the debt itself, more so than the demographic, and then behavioral data. Other questions? Yes?
You talked a good bit about prioritizing digital channels because people don't like to be outside. And I'm curious to get your take on whether you've seen that be effective with like older populations who might not be as, literate with technology and digital tactics, and how you kind of go about evaluating what's going to be effective for that group.
Yes, so we do see that digital channels, at least for the outreach, seems to be very helpful, even with the elderly population. I do say that in some cases, probably calls might be better, but even elderly people are not answering their phones anymore. We do have, in addition to SMS and email, we also do voicemail drops sometimes. And so essentially what it is, it's like asynchronous call, and they can listen to those calls. So what we find is we also ask people if they don't want to go straight to the website, they can call our inbound call center. So we do find some of the elderly people who may not be as comfortable with kind of setting up their plan, they may call and one of our call center agents will set up the plan for them. And then they get the reminders via email and everything. But I think that even with elderly people, because everybody now has been more accustomed to being digitally savvy. So we see even with elderly people, good response. Yeah.
On the complete other end of the spectrum, young people don't use phone or email. Is there, do you think digital engagement is going to grow into things like social media and the way the newer generation is going to be engaging?
Great question. I'm going to repeat it. On the other extreme, younger people don't use phone, don't use email. And so what are the channels? What do we expect? We see a lot of success with text messaging. We are seeing that some of the younger people are much more comfortable with text messaging. We do some level of social media, but we do it very carefully. We do Facebook retargeting, but we need to be very careful that we never provide private information about the debt to somebody. So when we do something like Facebook retargeting, essentially the message is, hey, there's something important for you to know. Why don't you check your inbox? We do that same with the voicemail drops because there is a higher chance that somebody else who's not the intended recipient might hear that. So those don't have any of the personal information. We may say, we're trying to reach this person. We would like to let you know that there's something important or call us. We can be an invitation. So we do think that there are other channels that are effective, but probably text messaging is one of the most effective ones with the younger people. Okay, I think it's probably the last question because I see Mike there. He's going to kick me out of here in no time. Yes? So the question is, how are customers receiving or reacting to personalization? Because personalization can sometimes be creepy. I tell you, I get very creeped out whenever I say something and then Alexa seems to know what to offer me. No, but the type of personalization we do doesn't have any of that. The type of personalization is more, we're starting to figure out that for you, a tone of voice that is more empathetic works better than a direct voice. We kind of know that based on where you are, maybe this type of payment plan is going to work better. So it is not a personalization that's based on showing like, oh, we know all this stuff about you, and by the way, we know that you bought this. It's more a personalization saying, I start understanding how you react as a person, and therefore I'm going to communicate with you in the way that's best received by you. Okay, I think that that's it. We're done. Thank you so much.